Ladies and gentlemen, I'm just letting you know that the show is canceled. Everyone can go home. April Fools, why would we do that, Coach Paul? Why would we do that? Show has to go on. The show always goes on. Welcome everyone to At the Buzzer, our market recap. This is your first time here. I'm Coach Jay. That is Coach Paul. The goal of this segment is to review what. Hopefully, we didn't lose viewers with me doing that. Right? That would be a very sick April Fool's joke to play on myself. Just send all the viewers away from your show. But welcome everyone to At the Buzzer, our market recap. If this is your first time here, I am Coach Jay. That is Coach Paul. The goal of this segment is to review what happened in the markets for the day. May not talk about markets that you've traded before, but I believe our goal as traders is to identify opportunities, see how we could have taken advantage of those opportunities while managing our risk. Coach Paul, how are we doing today?
No fooling, Coach Jay. No fooling. Good. Um, I was kind of bored, which is a good thing.
Boring is good.
Not much drama. My day trading, I lost a little. But swing trade worked well. Didn't really trade that much. Stayed out of trouble. How about yourself?
Good stuff. Started off great. Started off great. Had a short in the Dow that we called out during the opening call. Felt like I read the market really well. And traded my game plan for the most part. I think where I got caught up was trying to short gold before it was ready to go. And then taking a loss there, but manageable loss. We will be back tomorrow. Um, but decent day overall. Decent day overall. Let us know how you did in the chat. Were you up on the day, down on the day? Anything that you learned from the day? Maybe you stayed flat. Are you prepared for Liberation Day? You know, a ton going on out there in these markets, and you're here to talk about them. Let's take a look at the news really quick. Coach Paul did have some planned news out this morning. We had the Red Book come out, and a couple of Fed speakers, Barkin speaking as well. Biggest number that everyone was probably waiting for. We did have S&P manufacturing PMI come in at 7.568 million. Forecast was 7.657 million. And then we had JOLTS. Am I reading this right? I never read this right. That was the JOLTS numbers, guys. I'm sorry about that. I need glasses. The
This
S&P
is an April stroke, isn't it?
It's yeah, I just can't see. That's not funny.
that's,
Uh,
that's not fooling around.
no, not fooling around. I can't see.
Get a
The
pair of these.
yeah, I need them. The S&P manufacturing PMI came in at 50.2. Forecast was 49.9. JOLTS 7.568 million. Forecast was 7.6575 million. All right. Anything else you seen on the news, Coach?
Well, we
That we should
talked
be paying
yesterday
attention
that the JOLTS number
to?
could be catalyst, and it was. It was
Was.
lower than expected. Uh, Bad news is good news for buying, and we rallied right into the 200 bar moving average in the 30-minute, where we went right back to the opening and right back to the 200. But the catalyst was that JOLTS report. What does JOLT stand for? Job
Job
openings,
opening, labor, jobs. It's job opening labor.
tariff. That's just I heard T. I thought of tariff.
It's a good question. I don't.
All right.
Job
Someone
openings
asked.
and labor turnover survey. Labor turnover survey. There you go.
Okay. So whatever that means, it was a catalyst for either a short covering rally or bargain buying. So, but I think overall, we're waiting for what is it called? Liberation Day.
Liberation Day, where tariffs are going to go into effect. Sounds like tomorrow morning. We don't know exactly what time. I'm sure we'll hear more about it, but tomorrow morning should be, I think, an interesting morning in the markets for sure. I will be on Fast Markets tomorrow, trading with Coach Hoop, Andre, Jack, and I believe Hogue is going to be back. But should be an interesting morning for sure. All right, let's get into these markets and see what moved today. So we have 35 different markets that we can trade with Topstep accounts, not just the equities. And today, to the downside, we had natural gas. Actually, we had the Nikkei down 0.8%. Platinum down 1.9%. Platinum was our biggest percentage mover to the upside yesterday. And natural gas, our biggest percentage mover to the downside today, down 3.98%. To the upside, we had lean hogs up 1.94%. Micro Bitcoin futures off that 200 moving average, coach, on the daily. We talked about that yesterday. Up 3.3%. And soybean oil up 5.6% for our biggest percentage mover to the upside. I don't know how many traders we have trading soybean oil, but just from a technical perspective, coach, got above. I guess we can't really use the 200 moving average because it's a continuation chart, but that is a move if I've ever seen one.
Very interesting. With it, my feeling is you probably saw urgency.
Oh, somewhere.
That way you have the bean oil. Let's go over that real quick.
Yeah,
That's a good.
I don't think I've ever placed a trade in bean oil, and it looks like probably isn't worth looking at it overnight. But if we look at regular trading hours, there's trade there.
Yeah. Now, gap.
Yep.
And urgency. Whether it's bean oil, Bitcoin, rice, I've traded them all. But that's what we'd like to see. Wish that was on my radar. Oh, and you know what? This isn't the first day. Look at yesterday.
Yeah.
Same thing. I don't know what the news in bean oil is. By the way, if you don't, bean oil is a byproduct of meal. They crush soybeans for the biggest use of soybeans is for feed, livestock feed, poultry feed. And the byproduct is oil, which is vegetable oil. We've all consumed it probably every day. So why it might seem esoteric, it is a basic commodity. But whatever it is, who's in control?
Buyers.
Buyers. So what a move.
Pretty big move there. To round out our big four, we had crude oil down 0.39%. The S&P's up 0.31%. Gold made a new all-time high and is ended the day pretty much flat, up 0.04%. And the NASDAQ, biggest percentage mover in our big four, up 0.8%. I'm going to pull up a NASDAQ chart here, coach. Extended traded hours. Let's take a look at the daily. What are we seeing here on the daily, Coach Paul?
Well, we're still in a downtrend. It's interesting. The NASDAQ is much further away from that 20 than the S&P. It'll be interesting to see actually all the majors indices where they're at. Oh, look at how fancy you are.
See if we can do this real quick. We got the we got the NASDAQ on the top left, put the S&Ps on the top right, put the Dow on the bottom left, and the Russell on the bottom right. All right, Coach, what are we looking at here?
All right. The NASDAQ is, look at that, so farthest away from that 20, probably because of some very heavy Mag 7 stocks. But S&P is right there. I think the high today just below it. And was that the Dow on the bottom left?
Dow on the bottom left tagged it. The S&P didn't tag it exactly. 20 moving average on the S&P was at 57.19. High of the day was 56.94. But the Dow, the stronger out of the four.
Yeah, it would make sense that it is a safety play. Fund managers are not going to get fired for buying Walmart and IBM. When there's volatility in equities comes from the downside. The institutional entities are going to buy stock, and they're going to place it in blue chips, risk on, risk off. You've heard that, so it doesn't surprise me. But they're sitting right there tomorrow. What time? I thought it was in the morning. It's not until the afternoon that we're
I think
liberated.
if you look at the calendar, let's go back to the Trader Hub really quick. The deadline there was okay, so it's not here anymore. Yes, on the Sunday kickoff, when we did the Sunday kickoff, the deadline showed at 8 a.m. Eastern time. But now we can see Trump reciprocal tariff announcement not until 3 p.m. 3 p.m. Eastern, which is 2 p.m. Central. So a little bit of a change there, 3 p.m. Central Time, the reciprocal tariff announcement. So maybe we consolidate all day until then. Should be an interesting day still, and I'm sure this announcement is not the only time we're going to hear about tariffs throughout the day.
Hopefully, we'll get some clarity of what the tariffs are.
Hopefully so.
I think that's grasping on straws. I don't. Well, as a trader, we don't know. It goes through the thing. I always hear this: markets hate uncertainty.
Mhm.
What does that mean? If there was certainty,
Marcus wouldn't move.
markets wouldn't move. So as traders, we have nothing but uncertainty, and so we have to grasp and embrace that and trade accordingly. But the overall market, I think, is waiting for some kind of clarity of what kind of tariffs and what is the intention. At least a little less cloudy than we've seen. So
Electrodelic put it in the chat. Markets are uncertainty, and I 100% agree with
yes,
that.
absolutely.
Let's look at this daily chart really quick. We had that August 5th. We talked about this yesterday. We bounced off of it. So then the question was once we accepted back inside Friday's range, where we had that 3% sell off, 19,353s was the low of that Friday move. Once we accept back inside here, does that area start to act as somewhat of a support? So if we go down to a shorter time frame, and we look at got that 200 moving average right above us there, coach, on the 30, 19,685, which is right around 50% of Friday's range. Interesting spot there for sure. Last night's price action, pretty uneventful. Consolidated move. Once we got into the New York session, we did have jolts come out at 10 a.m. So I'm going to change this over to a regular trading hours chart, and we'll take a look at it there. Go down to a shorter time frame. And on the open, coach, kind of consolidated. I know the guys on fast markets were looking for some opportunities, but stayed patient through this consolidation in the NASDAQ. I think it made sense waiting for that JOLTS number to come out. But initially, it looked like we were going to sell. Initially it looked like we were going to sell. I'm going to move this over to the JOLTS candle. That looks like a decent sell to me, coach.
Wasn't the same thing in the S&P, and it was. I took it.
Yep. Yeah.
And I lost the 100. I did a micro. But I didn't. That was it for me. I took that side. It looked good. It didn't get to the 2-to-1. I was basing it on the 5-minute. So now interesting volume. It was tepid. That opening volume wasn't. Look at yesterday's selling volume. Yeah, today's opening volume was.
The opening candle was about 5,000 contracts less. Maybe because we do have that JOLTS number coming out, but I agree with you. It was like very indecisive for that first hour, really.
So, yeah, that JOLTS number jolted the buyers, I guess. Get some bargain hunting. Um, but this is after we do Nasdaq. I'd love to see the Dow. We don't
Yeah,
all
I
that.
I took I took that trade in the Dow. So the Dow was the one that got going early. I took the opening range trade maybe 3 minutes into the open. But Greg has a question here. The reversal in the AM session wasn't really an exhaustion trade since volume wasn't big enough. So how do you confirm that move at the start? Greg, that's a great question. Uh, Sometimes it's not going to give us a signal that that's a potential reversal, right? Sometimes it's just the lack of continued selling that's going to lead to that reversal, and it doesn't look like exhaustion. So maybe you don't catch that move right away. I think getting back above the VWAP from jolts here, and then maybe seeing some of this consistent volume push us back through that range, is it? But was there a clear signal to say that this was the low, other than us, if I change this back to extended trading hours, we tagged the overnight lows. So we came down there from a level perspective, but from a volume perspective, there wasn't a signal really until we got back above this VWAP, right? And then you start to make your trades from there. So looking at longs here, I'm probably not looking for longs in the NASDAQ until, 140 points off of these lows if I'm looking for some actual confirmation, which, there was a big enough move. There's still 240 points, but I don't see a signal from my playbook on taking this trade here from a volume perspective.
Well, the way to look at that is using that opening range. Highest volume of the day was the opening. That was
Mhm.
buying. Now, when do this? We talk. You should be actually, if you're going with the flow, you should be short there.
Yep.
Short at the lows, high at the highs. You're in a good trade at a minimum. But when did the selling fail? Two ways to look at it: a close above VWAP, or a close above the opening range. And so it's more dynamic, because what do you have? Just basing it on a price, but adding volume or VWAP to it can help you make a better decision. If I had to take my sell again, I'd take it again. I don't.
Yep.
It's a high probability that it's going to follow through. I lost a chip. That was the cost of entry. But looking at it, is it a buy? One of the things that I would suggest is then look where the selling fails.
Yep.
Uh, because on price alone, you could maybe you had support there. I had support at first level of support at 19,114. So it wasn't close to that.
Yeah.
But a more dynamic way of observation is using some form of volume. When we talk about volume, price, and order flow. So when you're looking to see one of the tricks one of the things that can get you off is trying to buy low and sell high. That sounds like I'm being ludicrous, but ask yourself, you know,
How many times have you sold bought the exact low or sold the exact high?
right.
Doesn't happen
So,
often. Doesn't happen often. Let's take a quick look at the S&Ps, and then we'll go over to the Dow. S&P, same story here. We tagged that August 5th low daily candle at the high. We tagged that high yesterday. So then the question is, it closed inside of Friday's range. Does this Friday range hold? As we talked about this during the opening call. If this Friday range holds at the low, right around that 5,600 area, then the trade idea would be potential rotation back up to 50% of this. And looking at this now, it's like, dude, why didn't you have an order down here? Uh, because the market did exactly that. We sold off into that low, held pretty close. I think 56. What was the low? 5,600 and a quarter was the low. Uh, is that a scary place to take a long? I would say no, because it's a major level, so I don't have to risk a whole lot, coach. The idea on this trade would be if the super level doesn't hold here, then I'm wrong, right? And I'm out of the trade. Uh, Pushing into that major 5,600 level without trading it, we didn't trade one contract at 5,600 evens. That tells me how convinced these sellers were about pushing this market lower and continuing to push it lower. Um, they didn't, right? 5,600 and a quarter was the low of that move. And really nice bounce from there, right back up to 50% of Friday's range.
Did we, while it was sitting there, did we get any volume that showed us that
Had a lack of volume.
it had a lack of volume? There wasn't exhaustion.
Yep, not
So
exhaustion. It was the opposite, right? But
this market moved on both sides of unchanged. What,
yep,
in other words, for that is balance.
yep.
Um, I mean, look at this one wave down, one wave up, another wave down, another wave up. Um,
Right.
that's balance.
That is balance. Let's take a look at the Dow really quick. So the Dow, similar trade. This is the first Dow trade I think I've placed this year, but this one, at least from the opening range, presented a quicker opportunity, maybe. But same idea. All of the equity markets doing the exact same thing. With the Dow, that VWAP never left that range. Balanced day. Are we surprised seeing balanced days prior to everyone's first, you know, whatever this day is supposed to be tomorrow? I don't think so, right? The markets, and we talked about this during the opening call, maybe not going to get too directional on a day like today, and that's exactly what we saw. We saw balance, big enough ranges to trade on both sides. There was trade opportunities. I do want to give a shout out to Mandy in the hour segment, called out a long from 460, and I thought that was just an amazing trade call, and clearly it played out. Right, we got back above VWAP from the full session VWAP. We got above it, held it as a support, taking a long. Did we know it was going to go almost 200 points? No, but sometimes when you're good, you get lucky. And that was a really nice trade, really nice call by Mandy. Uh,
Yeah, she defined it well and took it. It was a process. That's what I really liked about that trade. She observed it, waited, got this, got the signal, took it, and there was no indecision in her process at all.
None at all. And Dindin asked, did the market on this sell-off retrace right back to 50% of the opening range? Pretty much to the tick, and it held. Uh, so really nice observation there. Something I want to talk about here just a little bit. That exhaustion move. Sometimes what we don't see is as important as what we do see. Two examples here of where a lack of volume led to a reversal. We saw it already to the downside, right? Where Greg was asking, we didn't have that exhaustion volume. How do you know it's a reversal? We're pushing down here, in this case, into a major level with a lack of selling, which invalidates that move, right? Price is going lower, volume is not, VWAP's a flat line, right? Coach, this is that how far are we getting extended from VWAP before we see a reversal? Same thing to the upside here. We pushed into 19,650, which we were getting close to that, 50% of Friday's range, and look at the volume, right? So as we're getting away from this VWAP, volume is moving lower. Now, I was on call with my VIPs, and I thought that this trade was going to happen at 19,600, so I took it with a couple micros short. Got stopped out on that trade, but ultimately, what I'm looking for is okay. We've gotten extended from this volume. All of these weaker hand longs in this position here. Once price gets to a level where it can't find buying, what do we see? That burst of selling, right? This selling here is more, it brought us right back above that volume average, and we sell off from that point. So sometimes these reversals are not going to look like exhaustion. Sometimes they are. Sometimes it's going to look like a lack of volume, and that's what it was in this case as we got extended. Right. All right, Coach. Where do we want to go from here? We talked about the equities.
Well, let's see the gold,
Talk about gold.
the barbaric metal.
Let's look at gold on a daily. Talked about this a little bit yesterday. Gold did make a new all-time high. Gold all-time high on this contract, 31.77. So we did make new all-time highs, but are we getting a little bit extended here, Coach?
Well, we're a couple ATRs on a daily away. So one thing we can do is we found balance today. Hardly, I can hardly call this a blow off top under any circumstance. Yeah, one way we can tag that is profit taking. But they did make an all-time high. Still looks good to me. Now, if a position trader, which none of us are at Topstep, I'm still long. I have no reason to get out. From a day trading point of view, let's see how we started off last night. Now, remember, with gold, that isn't a formal open like we have in equities, because it trades 24/7. So last night we started off in a half an hour, and we've seen this before. Gold is bought in the Asian session, and last night was no exception. Look at that, was a perfect breakout on the buy side. From a trade perspective, there was definitely 2-to-1 risk reward, and perhaps a little more. But interestingly, this we can expect this is what's been happening out of Asia. There was some news out of Asia too, of Japan, China, and Korea acting together in response to tariffs. That news came out and gold jumped. Now, day trade, look on a buy side, yeah, that was a great trade. Let's see what happens. And now, once again, let's see what happens when when the dealing began in London.
So the selling started a little bit before London. We made that all-time high. This is 1:30 Eastern, 1:30 a.m. Eastern time, 12:30 Central. So a little bit before that London Open, we saw that selling kind of right back to that Asia opening range.
Yeah, good comment from Matthew. So Asia generally diversifying away from the dollar, and that seems to be the theme. This has been going on for more than a year. So we can see the price of gold has been rallying for about a year. But what happened at the top? Did we get any volume? Anything in the 5 or 3 minute?
See, so we didn't really write at those highs. Again, we're making
No.
highs on lower volume. So I would say it's this one, right? Well, maybe we started to pick up a little bit. You can see it, but no, even then, there's not a clear uh, signal right at that high.
No.
Sometimes it's not going to happen exactly at that high. Go ahead, Coach.
No, there isn't, and there doesn't mean there has to be. So
Right.
we talk about trade management. It has to be part of your process. To me, if you had that buy early and you didn't get out on a day trade, you had a 2 or 3 to 1, 4 to 1 trade. Learn from that. It's called greed,
Yep.
or I shouldn't say greed. It's unrealistic expectations. 2 to 1 is within a good reason on a day trading basis. 3 to 1 is obviously a little less, but um, being taking money when it's made available is a key concept to consistent winners. Um, Trying to short it, well, we don't have a clear on a price basis. I had resistance on my daily levels. First level resistance was 3170. So I look at that level.
3170. Kind of right where that high volume came in here.
All right. Second level resistance was 3191.
3191. Okay.
So if what I'm saying is once it gets to the first resistance from just a price level basis, it's not a great place to establish getting long. Um, it's just it takes a lot, especially from a day trading perspective. Um, that's why I'm a firm believer of taking one side of a market and planning for a trade. But that sell off was pretty big volume.
Pretty big volume on that sell off. And the one thing I did want to point out is, in that overnight session, looking at where this higher volume came in, just to kind of frame out that range, selling, and again, there were sellers in this range. If we attach a view up to it, I'm sure it left that range to the downside. This is why I was looking to sell gold. I just got chopped up in this consolidation before it went, but risk above this high. If we think about, what this means, there was a seller here. If they're not letting the market trade above it, or there's not enough convinced buyers to take that seller out, then they potentially have the opportunity to come in and continue to sell. So even if we don't get that perfect reversal at the highs with that exhaustion volume, framing out where some of this higher volume happens gives you trade location. Now timing, completely different story. You could have sold in this and waited however many hours before the market actually moved from that range, but that volume was significant at that level. Uh, and then we see that's our location for selling off. USTR preps new tariff option for Trump. We did just get a little bit of a spike in the equities, uh, and it looks like it's already kind of selling off. According to people familiar with the discussions, President Trump's economic team is preparing a new tariff option for him in the final hours before his trade policy announcement on April 2nd. In recent days, Trump's team has considered imposing a 20% universal tariff on virtually all imports, as opposed to a reciprocal plan that would impose different tariffs on various countries. However, according to people familiar with the plans, the U.S. Trade Representative's office is preparing a third option, an across the board tariff on a subset of nations that would most likely be less than the 20% universal tariff option. So,
What
uh,
does that what does that mean?
that means that as big as the news was, yes, or supposed to be, maybe they're backing off from it just a little bit. Um, and I don't know if so that was the question as well, right? Do we in the closing hours, right, into whatever this announcement was supposed to be, biggest tariff day of all time? Do we see it start to revert a little bit, or get pushed back, or reduced? And I think that is just an example of that. So what do you do with that information? We're going to see volatility tomorrow. Uh, maybe either scale down or wait for the volume to tell you, right? I would really try not to make sense of the headline itself, right? Me seeing that headline, I don't really know what that means, but I know what volume means, right? And there's someone at my trading mentor who stuck to volume. He said the answer to everything for what we're teaching you, and my case here, you guys don't have to trade like me, but he would say it. The answer to everything is volume. And why is that? Because there's somebody who gets paid to figure out why they should trade a ton of volume there. I just have to follow them, right? Somebody's going to trade, or have to trade 5,000 contracts of the Nasdaq. I just got to follow them. Right? They're way they might not be smarter than me, but they have to put on a position. I just got to follow whatever they do.
Just to follow up on that is that as a trader, you have to control the controllables that you have. So having a trading plan, having a defined entry and exit is really the only thing you can control. So when we look at headlines like this, that's why I want. What does that mean? It means nothing. It means maybe if. Can you craft a trade out of that? Can you do that consistently? No.
So I think, just a good point Matthew made in the chat, just maybe trading overnight and then locking out tomorrow. I'm not going to do that. But again, like you said, we're seeing that information. And again, all that's telling me I can't craft a trade from that information, but volatility. So if I'm going to trade, just understand that there's potential for a headline like that to come out, right? At any given time. That means I probably don't want to. This is definitely not the time I want to be over leveraged. I'm probably going to scale down, trade some micros, or trade markets that maybe not won't be as affected or as volatile. Right? Maybe tomorrow's not the day I trade the Nasdaq. Right? Maybe I go look at the 10-year. I'll be on fast markets tomorrow. Maybe I'll trade the 10-year on fast markets tomorrow. But yeah, volatility is what it's saying. All right, let's take a look at crude oil really quick. Crude oil on the daily traded above the 200 moving average on the daily yesterday. Got a little bit of a pullback today. D said that this just might have been end of the quarter positioning or rebalance, and looks like she was right. Back to a $1 range in crude today. Anything you got in crude, Coach? This was a nothing burger of a day.
Balance above the 200. There was a decent rally last night. Looking at from the opening, we did break out. There wasn't, what I was saying is there wasn't much here.
Mm-hmm.
And with good risk management, you could have made a little or lost a little. But I'm still leaning to the long side. Let's look at the 200 on the half hour.
Down at 70.18.
70.18 is an opportunity to buy it. But like you just said, nothing burger.
Yeah, this was a tough one today. We were talking about it in our opening call, looking for maybe a trade, and a $1 range that's tough. Tough to figure something out there. But I am, like you said, Coach, on the higher time frame, I am leaning to the long side as well. Let's get that rally up to 80. Hopefully, we just don't do it 50 cents at a time on a daily, because that would be terrible. All right. Any other markets that you guys want us to discuss? Any other markets, Coach, that you might have on your scouting report? We did have a question from Dindin. Coach Jay, why
I'm getting hungry. I'm getting hungry every time I hear that.
Time for Dindin. Coach Jay, why do you prefer the 3-minute opening range as compared to the 15-minute opening range? Use whatever works for you. Traders are going to use 1 minute. I use the 3 minute just because I look at 3 minute charts for all my entries. Uh, we're going to use 5 minutes. Some people are going to use the 15 minute. Um, there might be a course that you could buy that came out on the internet recently about the 15 minute. Whatever it is, pick one and stick with it. Um, maybe we pick, and I'm not advertising anyone's course either. But but you know, sometimes we use the 30 minute for overnight trades, right? It really is just picking a time frame and sticking with that time frame long enough to see if it presents trade opportunities to you. And for me, the 3 minute just on any time frame that I look at, for the most part, I can get a trade from. Uh, we got nat gas, we got copper, and what is a good market that doesn't really respond to tariff news? I'd appreciate some tips. Thank you. Coach Paul, any suggestions on markets that won't be affected by tariffs? Because honestly, I've heard Coach Hoop mention even cattle and hogs are being affected. So
Yeah,
anything that you might be looking at.
especially hogs.
Mm,
The biggest protein in the Mexican diet is pork.
mm,
Same in China. Um, so any kind of reciprocal or tariff or trade war is going to affect U.S. pork exports. Period. Um, so we can roll out the meats, grains. No, yeah, that's affected. We'll go down the list. Treasuries. Mm, less than.
okay.
Um, probably crude oil.
Yeah.
Oh, but the Canadian, our biggest, we import a lot of crude at a discount, by the way, from our cousins up there in the north. I think oil companies are really happy about having to pay more if that happens. So no, I can't pick one. Maybe oats. Oh wait, oats are affected by most of our oats are grown in the northern states, and the biggest producer of oats are Canada. So no, I
Mm,
can't think of lumber is affected by the
everything.
Great White North. So yeah, it's not a little game that's being played. Study economics. Tariff. I just read this. That was is named after an Arabic leader, Tariff, who put taxes on imports. And
Hmm.
exactly
Still
what
being
a
used right now.
tariff is.
Yep.
It is a tax. So it's going to affect demand on consumption domestically. It's going to affect exports. Um, just look at the Smoot-Hawley tariffs of 1930. It exacerbated the Great Depression. There's not a light. That's why the larger institutions are very concerned. Things will change. You will pay more as a consumer, but that's why and that's a great question. It affects. I'm looking up and down the list. Maybe it doesn't affect cocoa, sugar, but
Can't trade those at Topstep.
yeah. So, but what and an answer to that is what? So, what can you control? Is your decision making and your risk management. That's the only thing really we can control. Um, let's let's look at copper. I haven't looked at that in a little while.
Take a
See
look.
if we continue on that blow off top scenario.
We got copper and
Yeah, we
the
do.
natural gas, copper and nat gas that we want to go over here. Copper's still selling off since we made that blow off top. Under that VWAP. Let's
Wow.
see last night's price action. Came right back up to yesterday's range. Sold off. Maybe they just need to liquidate whoever was in there, and was it.
That's how it works. And I don't want to go through the whole story again, but that's how blow-off tops work. There's the last buyer. And the last buyer is usually a short who's forced out.
Yep.
Let's look. Last night we actually had a small rally off of the open. We have a breakout and a big move. So
Pretty nice trade there.
there's a pretty nice trade. Now looking from that top that we were talking, what didn't happen? So let's put a 200 bar moving average on that.
$200 moving average is up at 51, 512.15.
Yeah.
512.15.
So this is a counter trend move. Look at that curling action. This market looks very heavy to me.
This looks like a nice short.
I'm looking for places to sell it.
Yeah, this looks like a nice short. We do have the 200 moving average on the daily right below us, but
the 20
moving average right below us.
Mark that for reference.
497.82. 497.82.
Why the 20? I don't know. But I do know this. Commodity funds watch the 20 moving average for profit taking or shorting. And so if they come in, they're not coming in with a 2 lot. They're going to come in with hundreds. They're going to move the market. And they're not sensitive to a price. They're sensitive to how much they need to get out of. So it'd be interesting. We could bounce off of that. I don't know, but to keep an eye on that.
And natural gas, Beast a lot asked about natural gas. Haven't taken a look at this in a little while. Let's see, it might be a little bit more interesting than crude oil because we know the percentages are usually bigger moves. Let's look at a daily. Like we had kind of had that same blow off top move on the daily here as well, trading up towards that $5
Yeah, we did.
and been selling off since then. Anchor at VWAP there. Interesting. Interesting. VWAP on the daily from that blow off top move, acting as a resistance this entire way down. Let's go out to a 30-minute chart. Take a look here. This is it's not looking too bad. Not looking more interested than crude, I'll say that.
This is affected by tariffs too.
What doesn't it touch?
Thanks to our cousins up north, they have large reservoirs of natural gas. Without getting the economics into trading, you're right. But look at that. When we had that gap open, the beginning of the week, we gapped, and it didn't follow through.
This here.
Yeah.
Yep. And we got the 20 moving average getting ready to cross under the 200. This looks like another nice sell as well. I'm writing down notes here. Copper, at gas, sell potential.
GDL. Does anybody trade NG successfully? Nat gas makes NQ seem slow. It's a very good point. If you do not trade the full contract, trade the mini. It's 1/4 of the size. It has a nickname in natural gas as the widow maker. It can be very violent. The full size contract is too much for a typical Topstep account. But minis, and there's micros. I've never traded them, but Yeah, you're right. This is a beast if you're trading the big one. So trade
I
the
mean,
mini.
if we say slow though, this is kind of a slow move, but look at this move. If you and comparing anything to the Nasdaq is almost unfair, right? As far as pacing goes, the Nasdaq's insane, right? So uh, it's probably the quickest market that we have. But compare this to anything that's normal, right? Where like the S&P or crude oil or anything like that. Uh, you know, here's the 9 o'clock Eastern, same opening as crude, right? If we look at it that way, uh, better trade than crude, in my opinion.
So let's go through the risk.
Mhm.
What that open? What's the opening range? Is it now? This is the 3 minute.
This is the 3 minute, correct? And we were just saying, and I just want to repeat this: anything we say on this show and on Topstep TV is for educational purposes only, not a suggestion to take a trade. Um, take and place your trades at your own risk. Uh, Coach Paul and I will do the same, but we're not suggesting any trades.
No.
But yes, the nat gas and copper right now, from a technical perspective, look like better shorts. Now, is it just a blind sell it anywhere? No, but it's looking like a better opportunity to the downside. Uh, Go ahead, Coach. We're back on the 3 minute.
Back to how much? So what was the average true range on the opening?
On the open, ATR was 15 ticks. Is that right? 15 ticks?
Yeah,
Yeah, about 15 ticks.
15 ticks. Well, that's $150 on a 3 minute for the big contract, a quarter of that. So, no, two ATRs would be 300. So a quarter of that for a mini. Um, yeah, maybe it isn't too big. But no matter
Yeah.
what it is, your entry, understand what your risk is and what you can afford. Um, this was a runaway sell. Didn't know that coming in, right? So we just remove all that. It'll be hindsight trading, but the flow, it was down. We had sellers on the opening, good volume. Well, we attach our VWAP. Are they going to continue to sell? Well, yeah. So one simple thing is sell it on the breakout, risk either the new highs or two average true ranges, and accept it or don't put it on. I can't say that enough. How
Accept
many
the
times
risk.
accept it?
Accept the risk. Uh, for Jen, what is the ATR? ATR is the average true range. It's the average of, on this chart right here, we're on a 3 minute chart. So it's the average of the last 14 minute, average range of the last 14 3 minute candles. It's just looking at the high and the low of, in this case, with the default indicator, the high and the low of the last 14 candles and giving you that average range.
Yeah. I almost should just call it the average range. There's a reason for true range because when this was developed by the great Wells Wilder, um, there was no night trade or um, overnight trade. So there was a lot of gaps. So to compensate for the gaps, part of the summation puts has a way to balance that out. That's why they call it the average true range. I don't want to get too much deeper into that. Consider it the average range.
Coach, any other questions that you guys have? Any other markets that we want to discuss? Uh, I know I said it, but I might actually look for a trade in the treasuries tomorrow on Topstep TV because they've been presenting some decent trades from what I've been looking at on the opening. right? Here is, and for the treasuries, and I don't want to confuse anybody, but for the treasuries, I might look at a higher time frame opening range because they don't move. If you think nat gas moves slow, uh, take a look at a 10-year chart. But maybe looking at a 15-minute on that equity open. Uh, I was doing this while I was locked out of my account for trading for the rest of the day, but just looking at these 15-minute opening ranges in the 10-year. Let's just go to a regular trading hours here. Looks like some decent opportunities here, Coach. So maybe I'll look at these tomorrow during tariff day.
Well, interesting. Yeah, we don't give enough.
The biggest markets in the world.
Yeah. It is
Biggest
the
markets in the world.
antithesis of the NASDAQ. There's no, someone's talking about vicious sweeps, stop runs, all the above. No one is playing games in that market.
You can't play games in this market. Because if you do, you need to trade at least like 5,000 contracts in the 10-year to even play games. You said it. You say it, Coach. It's just like you put your 1 or 2 lot orders in there, and they're just like, oh my God, it's this guy, right? Put him at the back of the line, and let's get his
Yeah.
order filled. If you look at the order books in the Treasury products, order books are like 300 up and down, and yes, they can play games in any market, but
It's believe me, I'm involved in it. There's no one that's big enough
right.
to screw around. Now you can throw a tick, like I said, on my options. I'm the pain in the ass, and I relish it because they want. Literally, there's some options that are 25,000 on the bid and offer, and there's like a half a tick in the middle, and I'm trying to buy 2. By the way, they will not let me in. It's like I'll just keep it there because then the algorithm looks at that. It has to respect the price, but it stays true. There's no flopping around. I understand it enough. But wow, I kind of like that. Is this a 15-minute?
This is a 15-minute, yeah. I'm just going back and kind of looking at all the ones that do play out, and it doesn't always. It doesn't always, but
Nothing
sometimes
always.
nothing
But
always
is it
works.
risk taking it?
Probably pretty low risk for some decent reward. So something I might look
Yeah.
at tomorrow. We will take a look for sure. Anything else you got before we go, Coach? We are at time.
Oh, we're at time. We talked about Bitcoin. We'll look at it again tomorrow.
Awesome stuff.
That's it.
Andre
Plan
calls
your
out.
trade. Yeah.
Go ahead, Coach. Go ahead.
Plan your trade and trade your plan. Back to you, Coach.
That is it. No, Rich Layton was saying Andre calls out 1,000 lots in the ES, and the 10-year is stacked with 3,000s. Yeah. I don't even know what a big order would look like in the 10-year. But it's definitely not 1,000. That's like a drop in the bucket. But trade well, manage your risk, everyone. Understand that tomorrow is probably going to be a volatile day, or it could not be, right? The announcement is not supposed to come out until later on. I think I would be naive if I thought that we weren't going to hear pre-announcements before the announcement. But with that being said, the market is going to present opportunities to take trades. Uh, you know, don't over leverage, but that's the case for every day. Um, and take your opportunities when they present themselves, manage the risk, and go from there. Uh, thank you everyone for joining. Thank you, Andrew, as always, for sending over questions. And we have Coach Hoop coming up in Discord in about 15 minutes. Coach Rain, Coach Vince at 6 p.m. and 7 p.m. Central Time. Coach Dakota with slow markets at 7:30, and then Deanna, Coach D, and tomorrow she's going to have Jerome on. So if anyone is awake during the London session, 3:30 a.m. Central Time, she's going to have Jerome on. I think they're calling it Mindset Wednesdays. So Jerome, who is a live funded trader with Topstep and a brain doctor, is going to do a segment on the mental side of trading every Wednesday for the London session. So even if you can't catch it live, maybe catch it on the replay. Thank you, everyone, for joining. Hit that thumbs up if you haven't done so already. Tell your friends and family to subscribe, and we will see you all tomorrow. Thank you, Coach.
All right. Thank you, Coach.
Have a good one.
Goodbye.